in a couple of hours, the Central Bank of Nigeria's Monetary Policy Committee will conclude their two-day meeting ahead of the announcement of the committee's decision. I have Victor Aluyi, he's the head of portfolio management at Comercio Partners. He joins me as we look at what will be coming up today for the MPC as they decide. Thank you so much for your time on the show today, Victor. But when you look at how things have played out so far, we saw that Q2 GDP contraction for Nigeria. We've seen inflation also, continue to rise. For you, what are some of the key things that would drive the decision making for the MPC today?
One of the most difficult MPC meetings that that committee is going to have, and this is the penultimate one for the year. And like you rightly mentioned, this meeting is coming against the backdrop of significantly weaker output growth, accelerating inflation, relative illiquidity in the currency space, very low capital inflows into the capital market. So clearly there are a number of challenges on, quite a number of fronts. So I think that the committee would essentially be looking to navigate on how it would address a lot of these issues, the issue of price stability, the exchange rates, the inflation rates, supporting output growth. I think these are the key issues that will be on the front burner and would be top consideration for the committee today.
All right, well, let's get into the challenge on FX stability. We've seen how things have gone so far with FX, but then central bank resumed sales to the Bureau de Change just a couple of weeks ago, and then we saw the price of the parallel market drop for a bit, but then we're seeing it come back up. What do you think the central bank could do decision-wise today on this?
I think that's probably the elephants in the room, really, the FX situation. Over the last couple of meetings, we've essentially looked to the committee for some form of guidance, if you will, as to, policy stance by the Apex Bank. Between March and now, we've seen, various adjustments to that official rate. We've also seen, some unconventional methods, if you will, by the Apex Bank to try and rein in, speculative activity and also to protect the reserves. With which you would try to continue to defend the Naira. Even with the resumption of, FX sale to BDCs, the expectation was that we would see some significant impact, but that didn't quite come through, and it speaks volumes about the, illiquidity, relatively that still exists, within that market. It really remains to be seen. If you look at the conventional method through which the Apex Bank will be able to defend the Naira and take care of the situation. It doesn't look so great with the whole COVID situation, with where our reserves are at, and then with the price of crude oil. It doesn't provide much ammunition for the Apex Bank to handle that situation. So it's a really tough one, and unfortunately, this is something that needs to, be dealt with for all the other factors to actually come in line. So it really remains to be seen what the Apex Bank will do in that regard.
All right. Earlier today, I spoke to the head of research at Chapel Hill Denham. He was of the opinion that they will see a wait-and-see approach from the central bank today. What are you guys calling out for at Comercio Partners?
Well, I think it's most likely going to be status quo, really. I don't think that, we don't think that the Apex, that the committee is going to make any significant move in terms of the benchmark rates. What we've seen is that the central bank has been, intervening, through various accommodative policies, trying to address, the structural issues that have led to the continued spike in inflation. Loan forbearance, moratorium on loans and all of that stuff, which should help address the output growth issue and should also be able to address the inflation issue going forward. As for the FX issue, that's where I think, the issue really is. Again, if you look back, we've had times where the benchmark rate was significantly lower, and that didn't necessarily translate into strong output growth. So I don't think that a rate cut here would serve the purpose of, sort of like reflating output growth. So on the back of that, we really don't see any move. We think that the committee is going to maintain status quo. Nevertheless, we're likely to continue to see, moves by the Apex Bank, unconventional, if you will, in certain cases to continue to try and, keep the economy on track with respect to output growth, inflation, and also exchange rates.
But very quickly, what's your house call on the GDP growth for Q3 and Q4?
Well, so for Q3 and Q4, we are looking at a slightly better outing, seeing as the impact, the full weight of, the COVID-19 pandemic was, really felt for the better part of Q2. So looking at the fact that the economy has essentially reopened and is likely to stay that way. It's been reopened for the better part of Q3 and is likely to stay that way through Q4. We are certainly going to see, better than what we saw for Q2. Nevertheless, we're still going to be in that negative territory.
All right, still in the negative territory there. Victor says, thank you so much for your time and analysis on the show. I've been speaking to Victor Aluyi. He's the head of portfolio management at Comercio Partners.